All right. Hey, welcome. Thanks for joining us for another week of Maxsi Market Review. I'm Max. I'm joined with Sid today, and we're going to dive straight in this week looking at the SPY, the S&P 500. Yeah, the SPY. That's right. And the QQQ, which is the NASDAQ index. So as you can see here on the chart, October, we got a bear print in both charts. So we had been getting our run up here. We had our trading indicator, the Maxsi Trading Buddy, had been printing a bull. We've had quite a nice run, nice little bull market kind of like conditions for a little bit. And that seems to be turning south now in the past 2 weeks. And so we've got our bear print. We're really just waiting for the strength band there to turn red to kind of confirm this trend. So before that turns red, it's possible that we get a little bit of a retest up. You know, you can see how the price is currently below the band. It's possible we now retest back up to the band, become rejected, and then confirm the trend with a flip to red. But it does look like the markets are starting to turn south a little bit. This is all kind of on the back of quite a long run up here, a little bit of a bull kind of sentiment. Lots of people, calling for a long extended, bull market, the soft landing that Jerome Powell has promised us. People were very excited to see that was potentially playing out. And now we're seeing a little bit of that sentiment starting to fade, the market kind of taking its turn, and potentially, the soft landing turning into more of a harsher, potentially a recession. The talks are
possibly
back.
A recession. Yeah,
the talks are coming back out of the woodwork.
I think like, this, I mean, it did give us some hope, the soft landing, because like, we did sort of like, at least half of this year, ever since April, we've been on an uptrend.
Yeah.
And it looks like, it's looking like it might have just been a retest of last highs. So this is the last high you can see here, where we had the bear signal. And that was the last stop in 2022. And you can see the indicator how well it's called a top last time around. And then we had a red, the band flipping red in color to like confirm that. And then the market's just been on a downtrend ever since that in 2022. And then it kind of like bottomed. And then, in April, we had a bull signal with the green band flip on both the S&P 500 and the NASDAQ. And the markets have just been doing retests. And, and so it failed to cross, the last high and make a newer high. And I know we did talk about a potential cup and handle pattern in our earlier video, but now it looks like that might be invalidated. So
we were looking at that channel line that would have been
the channel here,
handle, and that's been
exactly
that's been broken out of.
Yeah, it's like dropped below the channel. So now, like Max was saying, like we're gonna probably have a retest to the strength band that can happen. Like, price doesn't just go down in one line. So you're gonna have retests and then like drop again, So basically, usually what happens, and we can see here where it topped out, it retests to the previous high, it fails to make a new high, and then continues dropping, again retests, and then continues dropping. So here we could retest the band, retest around here, maybe even like double top, and then continue dropping to make a lower high.
Yeah, and that drop is pretty in line with also the head and shoulder pattern we were kind of observing.
A while ago, exactly. The SPY, the head and shoulder pattern. And I think the last video, like we pretty much called it, like it hit the target.
Yep.
And let's see, actually, like if we go to the S&P, I think it was
the head and shoulders.
Head and shoulders. There we go.
Oh, perfectly to the. There it is.
It's like to the T. Let me take out the support and resistance lines. There we go. Just to keep things clear.
Yeah.
So this is where we had the target. And if we go back to some of the earlier videos that we had posted about the potential head and shoulders pattern. And you can see how the price retested
the neckline.
The neckline there, and also our indicator strength band.
Yeah,
so you can see
conspicuously it lined up perfectly with that neckline.
Right?
So if you know nothing about these patterns at all, just the trading buddy was enough to be like, okay, this is where we should find some resistance, and we absolutely did.
Exactly. And then it continued dropping, and then there we go. It actually hit our target. And now we actually have retest. Now that we're talking about it, now we have retest.
Oh yeah.
And this is where resistance is. So it's right. We tested.
It's sitting on
right at resistance. Yeah.
So
we can see in the past how our indicator, the trading buddy, the Maxsi trading buddy, how it's been pretty spot on in calling the bull and bear trends. We still haven't got the band color to flip red, but it's pinching, so which means that we could get it soon.
Yeah, and we're kind of approaching that neckline again too, which is definitely going to act as pretty strong resistance now. So pretty good entry point here for short positions, I would say, on the S&P 500.
Yeah, and actually, if you look at the monthly had also recently closed, and this looks like a lower high in the monthly.
Yep.
And this is still on bear. We're retesting actually the monthly strength band too.
Yeah,
and it dropped below the strength band, and now we're retesting the monthly strength band too. So, and the stock is curling down. So I think going back to this, we had the bear signal in October, so many weeks ago, and the prices, has dropped. Now it's doing a little bit of a retest.
Yeah.
But I think it's going to continue dropping. Once we get the band to flip red, that'll confirm the downtrend too. But I'm bear while the signal is bear.
Yeah, exactly.
So
and now
that's how
we have a lineup. We have a nice lineup of the weekly signal being bear and the monthly signal being bear. We're really just waiting to see the strength band follow suit and confirm these signals. So good time to.
So this is a big moment, because like Max was saying, now if we could potentially go into recession if this continues down, and all the talk about the soft landing, it might not.
Yeah, especially given the Federal Reserve, FOMC meetings suggesting that the interest rates will remain high longer than initially projected, which means money is more expensive longer term, which means business is harder to kind of you're not getting free money like you used to, and like we did the whole run up on that bull market side. So now that we have a little bit more, cash is king kind of scenario going again, where cash is going to be paying you pretty solid dividends, or rather interest yields on, bonds, on money market accounts, on CDs. It definitely makes these kind of equity assets a little bit less attractive, because obviously they don't produce a guaranteed return, whereas those cash assets do. And right now those returns are 5-6%, which is really solid. So it's hard to argue for somebody to hold equity assets in stocks or in any kind of security that isn't guaranteed to maintain its value, when cash, which is just cash, is going to pay you 6%.
You were talking about cash, and we were actually talking about this retest, because if you look at this, this is S&P 500 on the right, and here's the DXY, or the dollar, on the left. And this was something that we had shared a while ago, that it would top out and then price would pull back and drop to our indicator strength band, and that's exactly what's
happened. Yeah, look at that.
And I drew this out. If you look back at our earlier videos, you can see this.
It's 3 weeks ago now, or so. Yeah,
it played out exactly, and this is
again right to the scenario. Mark, right to the target. There, we dropped right to the bottom of that little point, which again, even if you're not marking these technical points on your own chart, the Trading Buddy strength band is acting as that point for you. So you can see we did pull right back, and we're trying to look for a bounce here in the DXY on the strength band.
It looks like, and if you look at this, we've talked about this before, that the equities move kind of in the opposite direction or in inverse of the dollar. And you can see last week the dollar dropped and equities did a retest pump. Exactly the opposite. And that's, I think, also another reason why I just think like equities just did a retest pump, but not necessarily, but we're still, bear. See, this is still on bear, it didn't change the bull. So now if the DXY, if it like, you can see this is the last run up. And if it, for it to, if you were trading Forex, then this would be really easy and helpful.
Yeah. So if you're trading Forex, you would basically go long the US dollar against another foreign exchange currency.
Right. And so for the dollar to continue bullish, we would have to bounce here, which looks like it's starting to do. And then we continue making new highs. If it's bearish, what's going to happen is it's going to drop here, right? Yeah. And then we're going to lose the band. Once we lose the band and do a retest, and then we get rejected on the band and continue down, like that's like considered bearish.
Yeah, for the DXY and bullish for securities and equities. So
right, but right now it looks like the dollar is like looking like it might bounce, which means that equities are probably going to go down.
Yeah,
and
I would say that's probably the scenario I am expecting to see play out with the dollar, just because. Oh yeah, let's do that. Oh yeah, I was just going to say, just because of how great cash is right now as far as generating yield and returns for people. So it makes sense to me that people are, money is flooding into dollars out of equity assets or security assets, just because of the guaranteed return and the Federal Reserve signaling that those returns are going to stick around for a little while, more so than they initially had projected. But yeah, you just pulled up Monster. We looked at Monster a few weeks ago, and you had drawn out the parabola there.
And check this out, like and this is the weekly chart. We got a bull signal too, but it's like retesting the strength band, but it bounced exactly on the parabola.
Yeah, it did.
There you go.
So
it's like right there.
So the parabola is still intact here. So this parabola has been running for years, I believe. Yeah, years. Dang. So we're still we're kind of heading to the vertical side of this parabola. But dang, yeah, it's nice to see. If you zoom into, I think on the daily, there was a bit of a gap up there. So
I think so.
If you did kind of not participate in trading this one, I would say at the moment the move would be to wait for that gap to close back down to take a position long. Just because it's likely to close the gap when the price gaps up like that on the daily chart. It generally means there's not going to be a whole lot of resistance or support rather between the current price.
Yeah, it's like, think of it like, you just got air here. So and see, the stock is also very overbought. So my guess is like it retests or pulls back here to fill this gap.
Yeah,
and then if we get a bounce, then and this is still on bull.
Yeah, so we just got the bull print. I mean, the bull print on the daily happened before the whole gap up.
So. Yeah, way before the gap up.
Wonderful.
So so we're gonna look for a bounce, and then we can go long, but long term, it does look like the parabola is still on.
Yeah,
it's been insane. This was 104 profit from the last bull signal. Yeah. By the way, so
yeah, and that bull signal hasn't been invalidated yet, so we'll have to see how much higher this thing can fly. If it does end up going vertical, then that is in line with this parabola projection. And and look at that on the quarterly chart there. The Trading Buddy strength band is also forming a little bit of that parabola base.
Yeah, exactly. It's acting like support.
Yeah.
And then we should also look at crypto.
Yeah, crypto's been getting exciting this last few weeks. People have been getting real hyped. There's a lot of chatter in the crypto space about BlackRock has a spot ETF that's being assessed by the SEC A lot of people are assuming that the SEC will be approving that sooner rather than later. And so we get a lot of hype, a lot of price action moving into crypto. And a big part of that hype is kind of, it feels to me at least, it's a little bit of one of these kind of like buy the rumor, sell the news events, where, you know, there's a lot of hype, a lot of like excitement around the potential for the spot ETF to become, you know, come online, and therefore open the gates to kind of more retail and institution money entering the crypto market. But, you know, we also have to keep in mind that money would be entering the ETF market for BlackRock's ETF, not necessarily spot buying into crypto. And so what we're seeing here in the market, you have
I don't think a lot of people understand that. They just get it, you know, they just sort of like accepting, you know, they're sort of baited into the hype of like,
yeah,
okay, the day that the ETF is going to be approved, like either BlackRock or like, I don't know, like hundreds of thousands of millions of people are just going to start buying Bitcoin.
Yeah. So
and
just
I
as
think that's
I think
really
as a kind of really brief, to kind of like give a little bit of a context to what it means for an ETF to be approved, a spot ETF specifically, because there are already future ETFs that trade for Bitcoin. But a spot ETF just means that it's an ETF, which stands for exchange traded fund. So it's a investment vehicle that is backed by physical Bitcoin. So spot Bitcoin, meaning that BlackRock holds Bitcoin and then sells shares of its Bitcoin portfolio. So when you're buying a BlackRock Bitcoin ETF, what you're buying is a share of BlackRock's stored Bitcoin. And so when this, you know, does eventually get approved, the Bitcoin that is being sold as the spot ETF, the buying pressure that comes from retail and from institutional investors buying spot ETFs now doesn't necessarily translate to spot buying Bitcoin pressure, because BlackRock obviously already has purchased an amount of Bitcoin in order to seed fund, you know, its ETF before it ever applied for these types of approvals from the SEC. So again, what you're buying when you buy a spot ETF is you're basically buying a share of BlackRock managed Bitcoin portfolio. And so the only reason why that would add more buy pressure to the actual Bitcoin on-chain or like, you know, Bitcoin spot market would be if the buy pressure for this ETF outperforms the existing, you know, stash of Bitcoin that BlackRock already has established when it, you know, started to apply for those approvals. So again, it could be that, you know, this ETF goes live and everybody and their mom wants to buy some shares of this ETF. If that happens, then maybe they don't have enough Bitcoin on hand and then they do have to buy off the spot market. But generally speaking, BlackRock and any institution that applies for a new ETF has basically seed funded the backing of those ETF assets by the time that they, you know, submit those proposals. So I do read a lot of the excitement out there that makes people kind of seem to think that, oh, you know, this is going to drive a bunch of buying pressure into the Bitcoin market. And I have to kind of disagree a little bit, at least. While it could, that only would happen if the buying pressure of the ETF outpaces what the expectation that BlackRock already has set. So, and then when we look at the chart here,
that might happen.
It might
during, you know, the peak of the next bull market or whatever. But like, I think we still have some ways for that and to go. And I think, like, you know, I mean, typically before the Bitcoin halving, we have always kind of like had this like pre-pump. And I think if you look at it, like, this is the monthly chart for Bitcoin on the left, Ethereum on the right, and see, like, it's the same move that we're still going, but it seems kind of overextended. It seems kind of like a wedge pattern, a rising wedge, and then the volume you can see has been just dropping. And this is for both, and that's considered a bearish divergence. And then the stock is also sort of like double topping, you know.
So we're seeing all this rising price action, which, you know, is getting all this hype and people getting excited, but those people are maybe not paying attention necessarily to the volume falling while the price is rising. which again, that's what like Sid is saying, that constitutes the bearish divergence, which is generally speaking a bearish sentiment or bearish indication. And and a lot of the hype around the ETF seems to be driven a little bit by this misinformation or misunderstanding, where people think that, you know, the second ETF goes live, it becomes
and
spot buy pressure.
And I think like exactly, and I think like whales like sort of make use of that to like, you know, pump the market and because like liquidity is so low. They can
especially
they can
at the
make
bottom.
it swing a lot, you know, with at these times. And also, if we look at it, like the price of Bitcoin, it retested the strength band, our indicator strength band, but has failed to close above it. It's wicked kind of like, you know, above, but it's still like failed to like close above. So, and we still on the bear signal. We haven't flipped the bull. So once we have the indicator signal bull, you know, which happens mostly after prices like closed above the strength band. So, which it hasn't done. So like we're gonna wait and track for the bull signal to happen. So you can see here the last time around that started the bull market. And we still haven't got that. So until then, we're a little bit cautious. We trade these small moves. We've been doing that. And, you know, every up and down, we trade like, you know, see the weekly chart, it's been, you know, it's been on a bull trend. But every up and down, we like, you know, we've been trading the daily, for example, we can swing trade it or like scalp it. And so you can see the bull signal before like, the so-called ETF pump, but like see it's losing steam. And to check whether we're actually in a bull market, to start buying spot, we check the monthly chart with our indicator. So till then we're a little bit cautious. And we're going to track this and see, like, if price closes below the rising wedge, then it's definitely it's going to accelerate down.
And so right now, it's definitely still feels like there's a decent amount of reason for people to remain bearish, for us to continue our sentiment that the bear market hasn't ended. And I don't think necessarily that we're breaking the cycle just yet of, you know, like a bear market or a bull market rather starting before the Bitcoin halving. And again, the halving event is, you know, on the books here for late April next year. So 2024. So right now, I think we're getting a decent amount of price action here on lower and lower volume, which is, again, a bearish divergence, not something to get swept up too much into the hype of. But of course, good news can move these markets. And I do believe if we do get an SEC approval, especially before the final deadlines for those approvals, which those final deadlines are like, I think mid Q2 2024. It's like they can continue to postpone approving these assets for quite a while longer before they go through. So I don't think they will get pushed back that far, because I also believe the SEC is kind of running out of, you know, reasons to deny these requests or these applications, and that these applications, when they do get denied, seem to be getting their revisions and being resubmitted a lot faster than I believe the SEC is expecting them to be. So, you know, the industry's getting pretty good at this. And the second, you know, one of them does get approved, there will be a precedent set. And a lot of the other ETFs out there will also start to, you know, basically be able to follow the precedent and likely get that approval. So it's definitely going to be a nice little like news event, like some positivity in the market. And we'll probably see a little bit of a pump from the hype around that news. But we really
which is what we're in. So, like, to wrap it up though, like, let's also like mention how, like, you know, equities are in bear. So like, you know, crypto, I don't know. It's if equities and everything else is bear, it's kind of
unlikely. Hard to imagine.
To see crypto launch into like, you know,
a bull market while the rest of the stock market is turning bear. That I agree with that 100%, especially considering the last bull market in crypto was very much, you know, hand and foot. Like step by step.
All the bull markets.
It's always along with the equity bull markets. So we are seeing the DXY, the dollar is strong, and it's the news from the FOMC meetings and the Federal Reserve saying the dollar is going to stay strong longer than we expect. Of course, there's global turmoil and uncertainty driven by the global uncertainties.
War situation.
The potential of war is very real these days. And that's not great for investing as far as, the confidence that investors need in order to flood their money into equity or security assets. And so there's a lot of reasons to be bearish, but as always, we follow the chart first. And the charts are printing bear and looking to confirm the bear trend here. So we'll keep our eyes on this next week and the following weeks. We'll keep you guys posted on what we're seeing in the charts. But these are definitely the early stages of a trend shift from this bull run that kind of broke out in early April 2023. Like we can see here on the charts, there's definitely a shift from that trend back into this bear. And we'll have to see, are we going to retest the same lows as we've already visited on this bear market? Are we going to make lower lows? That's still very unclear at the moment. But absolutely, I think both stocks and Bitcoin, just generally anything other than cash right now, is looking a little bit more sluggish and a little bit trying to support an exodus back out into cash, as cash is offering such high interest rates, such good stable yields, and ultimately that's what investors want, is security, safety, and a way for them to grow their wealth, not necessarily the moonshot crypto kind of community who's looking to 10x or 100x their money on some insane nonsense trends. So generally speaking, the market is going to be moving into the direction of safe, secure bets, and those bets are currently in cash. So we'll have to see how this plays out. We're obviously keeping a close eye on all of this, as we always do. And so if you want to keep up with this, subscribe, keep tabs on our videos. We're going to keep posting them. We're going to keep watching these markets move. And of course, we're going to keep trading this stuff. We're over in our Discord talking about our trade moves every day, live trading these trends, obviously not just the super long-term trends that we're talking about here, because we're doing this on a weekly basis, but also we're trading daily. So we'll trade a lot shorter term trends, do a little scalping, do a little long and short swing trades. And you can always participate in the conversation by just joining up over at maxsi.io. We have the first month for free, so nothing to lose. Come check us out and maybe join the conversation. We'd love to have you. And of course, not just the conversation, you'd get access to our indicator too, which does a really good job of helping us time these moves and see these trend shifts as they're happening. Yeah. Even if you don't necessarily have the time or the understanding of fundamental or technical analysis to look at these charts, the Trading Buddy pretty much takes a lot of the guesswork out of timing those moves and seeing those trends. So let's see how it all plays out. All right. We will see you guys next time, hopefully. And until then, stay safe out there. Happy trading. And of course, hopefully these markets make us the profits that we're looking for, even though they are starting to turn bear. There's always ways to play these trends. The market doesn't have to go up for us to make money. So if you want to learn about some of those trends too, we always talk about strategies and opportunities that we pursue in both directions. So hopefully we'll see you there. And until then, we'll see you guys next week or next time we post our videos. Have a great day.